The Fed finishes a 2-day policy meeting this afternoon. A lot of analysts are expecting that Operation Twist will be extended. Sarge, what do you expect to hear from Ben Bernanke this afternoon?
Well, I think you're right. I think we'll probably see an extension of the twist, but it can only be a 2 or 3 month extension because the inventory is not that much. They only have about $190 billion worth of short-term securities left. A full twist would require something like $400 billion, so they can only go out 2 or 3 months. I think the focus will be on what Ben says, and I think it's going to sound quite dovish. I don't think they can go quite out of full quantitative easing yet because just politically it just isn't right yet. Plus they want to save that big bazooka in case things get really bad. But I think the tone will be very dovish going forward regarding that.
Now, a lot of people have said that the Operation Twist has had a limited impact on the economy. So do you think this really is the right move? Is it going to make a difference if they extend?
Well, you see, no, not really. Operation Twist, what it did was flatten the yield curve. Do you need the yield curve flattened anymore? I mean, with lower interest rates, supposedly that helps borrowers, but that doesn't help lenders. And credit is a two-sided pricing mechanism, okay? So it doesn't really improve the situation that much anyway. But what it does, it gives the perception politically of trying, of being out there, trying to get something done, trying to keep the economy liquid without increasing the balance sheet. This does nothing to money supply, which is important if you're saving up for that rainy day, which may be coming.
Right. And do you think there's a chance that they go into mortgage-backed securities with the Operation Twist, since the housing market kind of pulled us into this downturn?
Well, that's a very good point. I think it's more than likely that at least part of what they do today will be aimed at mortgage-backed securities.
Okay. And now, is there any chance at all that we hear nothing from the Fed, that they just stand by their rhetoric, that they'll be there to do something if necessary, but they won't extend or issue a new QE?
Well, we've seen, due to the Fed speakers the last couple of weeks, that there's probably a great debate going on there yesterday and today. It was probably a good time to be a fly on the wall. Yeah. But I think there's little chance they won't do anything. And if they do that, well, you will see a violent sell-off, I believe, in the equity markets. I think you'll be looking at support levels today and tomorrow. If that's the case, let's hope that's not the case.
Let's hope not. Now, if they do extend the quantitative, or the Operation Twist, do you think the market will be a little disappointed? They expected more, and since we've had the run in the last couple days, what do you think happens to the S&P in that case?
I think the response it'll be more muted than the violent sell-off we just spoke about, but I do think you will still see profit taking if that is the case. I think you'll be looking at the closer support levels, let's say 1350, 1343 in the S&P 500. I do think there will be some guys that say, okay, I made some money the last couple days, let's take it off the table.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to